Friends, welcome to our this session. So now we are going to discuss four concepts relating to income tax. One is tax evasion, then tax avoidance, then what is tax planning, and what is tax management. These are the four things. What I told you: tax evasion, tax planning, then tax avoidance, and tax management. Okay, what are these things? We are going to discuss one by one. You might have heard of these terms earlier. So let us learn all those concepts in detail. Let me share the screen with you now. Friends, you know, or let me say, all of us are aware of that tax has to be collected with authority of law. That means when we are paying tax or when government is collecting tax, government has authority to collect that tax. Right? So in an unauthorized manner, no one can collect tax from you or from any assessor. Why assessors do tax planning, or why a taxpayer is doing tax planning? Primary intention is to maybe to avoid tax, not you can say to reduce the tax burden or to pay less tax. Or sometimes tax planning is also thought to defer the tax burden. That means you are not reducing the tax burden, but you are deferring. So instead of paying today, you feel that you can pay after 1 year. That's also tax. So the objective of tax planning or objective of tax avoidance or evasion may be twofold. One is to pay less tax, second one to defer the tax. Okay, so if you look at this picture, you can understand that this objective of tax planning may be achieved through minimization of tax liability or postponement of tax liability. Postponement for the timing we are postponing. In fact, you are deferring. And to achieve these three things, there are three common methods. You can read it here. What is the first one?
Tax evasion.
Tax evasion. Second.
Tax avoidance.
Third.
Tax planning.
Okay. So you can understand from the picture that when we talk about tax evasion, we're talking about some illegal means. And tax avoidance, we are talking about some legal means, but this is a short-term approach that which you can get benefit only in short run. And when you talk about long tax planning, it is again legal and it is a long run. It will give you some long run benefit in long run. So it is a long-term. This is how we can distinguish between what is tax evasion, what is tax avoidance, what is tax plan. Okay. Now, when you talk about tax evasion, as you know, this is an illegal. That means illegally one can avoid tax. How illegally one can avoid tax? Can you think of some example?
So by not paying the tax on due date and to avoiding and by giving false financial statements.
Yes.
Tax evasion.
Your tax evasion means one example I'm accepting that by giving false financial statement. For example, let us say your sales is 5 crore, but you are saying 4.5 crore. You are hiding some sales, that means revenue you are reducing. Okay, by suppressing your revenue, by that what will happen? Your profit will be reduced. Profit will be reduced means your income under the head profit and gains of business and profession will be less and you will be paying less tax. Okay, so you are not, let us say someone is not accounting cash sales or hiding cash sales, only sales that are you can say happening through banking channel. That is recognized, but cash sales are not billed. They're not invoiced and they're not taken into revenue. Some people might be doing it, you might be aware of. So by doing that, what he's doing is suppressing his sales, consequently paying less tax. Is it legal?
No, sir.
No, sir.
No, it is illegal. So this is an example of tax evasion. Similarly, one can do one more thing by, let us say, manipulating the expenses. That means actual expenditure, let us say, salary is paid 2 lakh rupees, but I will show salary paid 3 lakh rupees. That means 1 lakh extra expenditure one is booking. When 1 lakh extra expenditure is booked, what happens? It has impact on the profit. Profit is reduced to the extent of 1 lakh rupees. Okay, and assuming that the tax liability is at 30%, tax rate is 30% on that 1 lakh rupees, 30%, that means 30,000 rupees is saved in an illegal way. I repeat it.
Yes, sir.
Okay. So that is what we call it as the tax evasion. Right. So one may be suppressing facts. One may be giving untrue statements, concealing income, inflating expenses, falsification of accounts, conscious violation of rules, etc. Through these means, tax evasions are possible that people can do tax evasion. It is unethical. It has to be condemned. And courts do not favor such unethical means. If the person will be caught, then court will never favor this kind of person because he has adopted an unlawful means. Okay, so this kind of activities are punishable under law. Okay, and what is
Yes, sir.
tax avoidance? Tax avoidance is not illegal. Let me tell you. Okay, you see, if you look at here, it is legal, but it can give you only for some benefit in the short term. It is legal. Legal, then how it is possible? That means you are reducing or negating your tax liability in a legally permissible ways, which has got a legal sanction. That means there is some ways in the law through which you can minimize your tax liability or negate your tax liability or defer your tax liability. But what you are doing within the four corners of law. But you are taking some advantages and finding out the loopholes. Law contains loopholes. So you are finding out those loopholes and using that thing to reduce your tax burden. Okay. You are legitimately arranging the affairs in such a way that the tax liability is minimized. And if at all the person is caught, then there is no tax evasion and it carries no public disgrace. This act is valid in law. It cannot be treated as a fraudulent transaction or fictitious transaction. Okay, just because you have used some loopholes of the law. And there is no malified motive involved. Okay, finished. Right. So it is done within the legal framework or taking advantage of the loopholes of the law. Understood? Yes or no?
Yes, sir.
Now, next concept is about tax plan. In tax planning is again legal. It will give you some long-term or permanent benefits. Here, what we're doing, arranging one's financial and economic affairs by taking complete legitimate benefit of all deductions, exemptions, allowances, and rebates. That means here the intention of the law is understood. And transactions and the affairs of the business or affairs are arranged in such a way that deductions, exemptions, allowances, rebates are used to reduce tax liability. Okay. Right. So this comprises arrangements by which tax laws are complied. You'll be complying the tax law, and through that you'll be saving your tax. All
Sir, I
legal.
have a doubt.
Yeah, please ask me.
If we are doing it as per the financial arrangements and as per the law, and there is also nothing illegal in it, then what is the difference between tax avoidance and tax planning?
Yes. And that is what I'm telling you. What is the difference between tax planning and tax avoidance? Okay, your point is that is legal. This is also legal.
Yes, sir.
Okay, so one case only thing I told you that it is you can get some permanent benefit. You are, and in case of tax avoidance, you may get benefit in short run, right? But the difference here is that when we talk about the tax planning, we also follow the intention of the law. We follow the spirit of the law. When we talk about this tax avoidance, we may not be following the spirit of the law, but what we are doing, we're taking advantages of the loopholes of the law. Are you getting?
Yes, sir.
And tax avoidance, we are trying to find out what the loopholes and we are making use of it. And when tax planning, we are not trying to find out the loopholes. We are trying to understand the spirit of the law. Okay.
Yes, sir. Yes.
So objective of law is understood and that is complied. That is used to reduce the tax. So all legal obligations and transaction requirements are made.
Yes, sir.
Transactions do not take any colorable device. That means just for saving tax, you cannot change the color of the, you are not going to change the color of the transaction. And also there is no intention to deceive the legal spirit behind the tax law. Okay, I think still you might be finding a little difficulty to understand what is this tax planning, what is tax evasion, what is this tax avoidance. Let me give you an example. Okay, so let us understand this example. I think after that things will be very clear to you. Now focus here. Let us say you are moving from one place to another place. Take some example. Some example, you may move from Bhubaneswar to Puri. Or anywhere, you can find it. So in between, there is a tax collector in the form of toll gate. Is there or not?
Yes, sir.
Now, if you're going here, paying tax, you're not doing anything. Regular transactions, you are crossing the road, paying toll, okay. Right. But let us say you do something which is illegal. For example, just before going, you will put an ambulance sticker in your vehicle. You may cross it, but is it legal?
No, sir.
If it is caught, it will be penalized. There will be public disgrace. Is it not?
Yes, sir.
Or you are going, you will show some wrong pass, some fake pass you are showing and you are crossing it. Is it legal?
No, sir.
No. Okay. Or you are writing something like police vehicle, government vehicle, and you are crossing the toll gate. You may cross it. You may be successful. But if caught, the court will never favor you. You'll be punished. So that is an example of what? Tax evasion. Okay, tax evasion.
Yes, sir. Yes, sir.
Okay, I'm giving you one more example. But you have found, now you have found, okay, I have to go from this place to this place, but there is a route here. You can go, not a good road, but still one can manage to go. And you are traveling here. You are coming here, you have to go from here to here, and here you change the route. Going there. Is there anything wrong here?
No, sir.
But is it the intention of the law you should go there? Law intends
Yes,
that
sir.
people should take this route. But there is a loophole you have found out and you are using.
Yes, sir.
So this is comparable.
Avoiding
This is comparable with what?
tax
Avoidance.
avoidance.
Avoidance. You are avoiding it. But if it is caught, nothing wrong. Nothing wrong. Court will say it is 100% right. There is a route he has traveled there. That's right. But let us say everybody takes that route. Then what will happen? The law will be amended. Law will move this gate to here. Law has to be changed. So this advantage you cannot permanently take. If everybody takes, in long run, you cannot take it. Till some few exceptions are there, okay, it's acceptable. But if everybody takes that route, then definitely law will be amended. This gate has to be brought to here. Or there will be another gate. That loopholes needs to be plugged.
Yes, sir.
Understood what is this? So this
Yes,
is
sir.
what
Yes.
this is. Yeah, you are saying, asking something?
No, sir.
No. Okay. So this is, you can say, you avoid it. You avoid it, but taking some legal means. But that is not the intention of the law. That is not the spirit of the law. But that is a loophole of the law. You have taken advantage of this. But third thing you may think some different. You may plan your travel in such a way that, let us say in a day you are crossing twice, you will doing planning in such a way that only once you will cross this road. Or you will have fixed a fast tag so that there will be reduction. That is the intention of the law. Law says that you should take advantage of that thing. Isn't it? Or
Yes,
you
sir.
will create a carpool, so instead of 2 cars, only 1 car will. So you are saving your tax through these means. So if you are adopting those things, these methods, so this is what? Tax planning, tax avoidance, or tax evasion.
Tax plan.
This is tax planning. Understood?
Yes, sir.
And there is one more concept come, that is tax management. Tax management is managing these affairs. So you are paying tax. That is tax management. It is a operational thing. How we will operate this?
Okay, sir.
Okay, paying tax, collecting receipt, or depositing money, or recharging your fast card. These are the tax management activities. I think it is now quite clear what is tax planning, what is without planning normal transaction, then what is tax evasion, what is tax avoidance, what is tax planning, and what is tax management.
Yes, sir.
Okay.
Yes, sir.
Same thing. All these things are available from, let us say, tax point of view. We can do the similar kind of thing. For example, let me tell you now examples so that it will be more clear to you. Suppose simply whatever income is coming, you are paying tax, filing return. That means you are not doing any tax avoidance planning, anything. You are not doing anything. Right? But let us say someone is suppressing his income. There is some income which is generated in cash, not reflected in bank account, not reflected in the 26A's form. Then he's hiding that. So that is an example of tax evasion. Is it not? And what is tax avoidance? Let's say there is a loophole in the law. For example, let me give you one loophole, example of one. This loophole is that if an assessee has taken a housing loan, are you getting this point? Housing loan, some people take.
Yes, sir.
Is allowed to get benefits of interest payment. Interest paid of 2 rupees, 2 lakh rupees can be allowed as a deduction. Okay. Okay, can be allowed as a deduction. Interest paid of 2 rupees, 2 lakh. And to whom it is allowed? It is allowed to the owner of the house. Okay. So what is the intention of the law? If there is a owner of the house, he has taken a housing loan, and from the housing income, he can get a deduction of interest paid for borrowing to the extent of 2 lakh rupees. Fine. Now, someone has taken a housing loan in joint names. It's a joint property and joint loan has been taken. Are you getting this point?
Yes, sir.
And they have taken a borrowing, and both the joint owners, let us say husband and wife, both the spouse, they're claiming this interest benefit. Because law has taken, owner can avail this benefit. And joint owner is also owner. First owner, second owner, both are owner. Both of them are availing this benefit. Okay. There is no restriction that in case of joint ownership, it has to be 50%. Law has never mentioned anywhere like this. So it is allowed with it, which is a loophole in the law, because intention of the law is that in a house there will be one owner who can get this claim. But somebody is taking the house in joint name and he's availing this because his interpretation is that owner includes joint owner. So joint owner is also owner. So first owner can take, second owner can also take. Is there anything wrong? If it is caught in the court of law, he can very well argue. You see, you have not restricted anywhere. You tell owner, I am owner, I have availed. She is owner, she has availed. So what? What's wrong?
Yes, sir.
So what is this? Is it not a loophole in the law?
Yes, sir.
But some people are doing it so. But everybody does this. Let's say everybody will take housing loan in joint name and will avail double benefit. Then that loophole will be plugged. Government will definitely 100% plug that loophole.
Yes, sir.
Is it not? So that is an example. You can say tax avoidance, not evasion, avoidance. So there will be many examples. Sir.
Yes, sir.
Okay, then what is tax planning? Let us say we are claiming deductions under chapter 6A. You have invested some money and claiming deductions. Or you are availing the reliefs and paid allowed. Then what is that? That is tax plan.
Yes, sir.
Okay. And let us say the process you are doing. Let us say you are filing income tax return, depositing income tax through challan. Right? When required, you are deducting tax at source, paying advance tax. These compliance things are called as tax management.
Yes, sir. So, one more question I have.
Please ask
Like,
it.
yes, sir. So, recently you gave an example, like under section 89, like if the areas are pending and if the person has to pay, then he can claim the relief. So, it
Yes.
will be tax planning or tax management?
It is tax planning. It is tax planning because within the framework of law, through legal means, he is planning, he is claiming a relief. It's a genuine relief which has to be allowed. Law has allowed you, law has given you option to claim that relief, and he was claiming. It's 100% tax plan.
Okay, sir.
Okay, right. But in that thing, let us say you are giving some wrong information. Actually, that is not area, current year salary. You are showing it as area. Then that is tax evasion.
Yes, sir.
Okay, got it. Okay, so when you talk about tax planning, there is no intention to deceive the legal spirit. Here you try to understand what is the spirit of the law, and we try to comply with that. Okay, even if there is some loopholes in the law, so we do not take benefit of that loophole. Rather, we follow the spirit of the law. Okay, that is tax planning. And when we refer to tax management, it refers to compliance with statutory provisions of law. You have to comply. So it is mandatory. Tax management is mandatory. Tax planning is an optional. You may plan it, you may not. For tax management, it is mandatory. And if someone is doing poor tax management, it leads to interest, penalty, prosecution, etc. So tax management includes maintenance of accounts, filing of returns, payment of taxes, deduction of taxes at source, timely payment of advance taxes, collection of tax at source. All these are the components of the tax management, which needs to be managed. Is it clear to you?
Yes, sir.
These three concepts are clear. You can find out suitable examples. Any query after this?
No,
No,
sir.
sir.
Thank you very much.